actually, by offering a service like ours where you're able to pay in installments, you're effectively giving your customer the ability to match their revenue with their costs more easily. So they're smoothing their cash flow. That's a huge win for a buyer. And therefore you will consider it when you start looking at where you make your investments and where you make your purchases. It's actually a strategic marketing and sales tool saying, I'm going to help you run a better business, because by offering these kind of services, you're able to match your income with your outgoings.
All right, I'm joined by Lara Gilman from iwoca, and you guys have a really interesting report coming out. When's it coming out?
It's actually already out in the world.
It's published. When did it get
Yeah,
published?
so it got published about 4 or 5 months ago.
Okay.
So it's kind of new for this year, that we kind of went back and revisited some data we looked at 5 years ago.
Amazing, and it's centered around trade credit. And so I'd like to start with what trade credit is and get a definition of that. I think it's interesting for the audience because we have some people that are entrenched in distribution and manufacturing and came from that business. Others that came in from like B2C, they're in digital and B2C, and they've now come into the business and they're running kind of digital and e-commerce. And so sometimes the definitions for the business things like trade credit are interesting for everyone to hear. So let's start by defining what trade credit
No,
is.
and actually, I think it's even a more complicated question than that, because it also depends on who you ask and how they consider what trade credit is. So like in its very, very earliest form, I mean, trade credit is just that basically payment terms between a supplier and a buyer. That's its most basic form, and it's existed for hundreds and hundreds of years. In terms of how they've kind of managed it, that credit risk between a supplier and a buyer. However, what's actually happened over time is it has evolved to a number of different meanings. So it can mean payment terms. It can mean a very structured like trade credit account. It can mean kind of some variation of invoice finance or invoice factoring. And so there's a lot of different solutions that come into that. And even now, like, we position ourselves as a trade credit provider because ultimately that's what we're trying to solve. We're at that center between a supplier and a buyer, providing that credit coverage, so that we can basically take on that expertise. But when we talk about it, some people will say, oh, it's like buy now, pay later. It's like payment terms. It's like invoice finance. It's lending. It's whatever. So I think a lot of times when we talk about trade credit, it's a really important place to start. What do you mean? And when we mean we are taking the credit risk away from suppliers and carrying that burden ourselves so that they can just focus on making a sale with their customer.
So when someone goes to buy like from a distributor and maybe it's the first time or first couple times and they sign up, often it's a lengthy, in the traditional way, it's often a lengthy process, right? Fill out a 35-page PDF for the distributor, and to kind of prove your credit worthiness. And you guys kind of disintermediate that and say, we take the risk for that customer and allow them to purchase off you. And if their payment is delayed or something like that, you guys take that risk on instead of
Exactly.
the distributor. That's really cool.
Exactly.
Well,
And also goes the other way as well, actually, just to add, you're exactly nailed it, that, for credit control teams, it's a way that we can basically provide that extra insight around the credit process. But it's also for suppliers who don't have those credit controls and are just saying, yeah, no problem, pay me next week. And then next week becomes next month, next year, and they don't get paid. And so actually it's both scenarios, whether you have this 35-page, big, heavy process that you're trying to sort of understand the likelihood of this customer's ability to repay, or you're just trying to make the sale and you're like, yeah, no problem, I just want to make the sale, so go ahead. And then you're left holding the bag on someone who never pays you back. So
Yeah.
it's kind of both scenarios.
Otherwise, you're kind of stuck using credit cards, and which just isn't as heavily used in our industry. So tell me a little bit about this report and what are the different components of it, and what do you guys kind of discover through it?
Yeah, great question. So it actually started, so iwocaPay has been around for about 5 years, and we started the product kind of in the midst, just in the midst of COVID. And we just kind of started to look at how do businesses perceive trade credit? What do suppliers think? And what do their customers think? What do these business buyers think? Because we're only looking at the B2B space, obviously. And so at that moment in time, we ended up with this incredibly rich data set of asking businesses, what do they think about trade credit, pretty much the exact month that the UK went into lockdown, which
Mm.
means all of a sudden, all those things they were concerned about, like getting repaid, were very much coming to the front. Cash flow was the biggest issue for businesses
Everyone.
globally. Yeah, it was everyone, all like very, very relevant. And what was interesting at that moment was understanding how perceptions or expectations around people's receivables was changing. So in 2020, more than half the businesses had more than, or nearly half the businesses had more than £10,000 exposure in their receivables that they, and of those, most didn't think they were going to get paid. And so we sort of thought at that time that suppliers' relationship to offering trade credit and offering this kind of service was going to change. So 5 years later, we were curious if it did change. So this report that we launched is really around how has trade credit and the perceptions around trade credit changed in the last 5 years. And so we partnered with CEBR. We talked to 500 UK businesses and talked to them about what their expectations of trade credit are, what are their perceptions, how do they use it, and what does it mean to them? And so that's kind of what we really get into. And I
So
think
what are the kind of major shifts that have happened since 2020 to 2024, 2025?
so. A big one is actually, first in 2020, it was really a credit control product. It was around, I just need to make sure I get paid. How am I going to get paid? I'm very
Mm.
nervous about the cash flow problem. What's kind of fascinating is that over the last 5 years, it's shifted. That we sort of expected businesses to stop giving trade credit because of this cash flow concern. And so we sort of expected that that there was just going to be a much tighter control of that. That hasn't really happened. And the reason that hasn't really happened are a couple of things. First of all, buyers want it. So your buyers will actually make a decision about what supplier they use based on whether or not that supplier offers trade credit.
Hmm.
A second big issue is digitization. So actually, now that businesses are moving more online, the availabilities of products and services they're offering is getting more interesting, and so things like digital trade credit are more available. And what we're also finding is that e-com generally is positively reshaping our industry, and digital providers are actually more productive the more digital services they use. And so, where does trade credit fit into that? Well, ultimately, trade credit really is becoming more of a sales tool. In fact, one of the stats I really like from the report is nearly 70% of businesses said that having a trade credit option in there for their customers increased their number of sales per year. And they saw a direct impact of being able to offer these kind of services. So it's really because of the change of moving more electronic, moving more digital, becoming more digitally savvy, moving more into an e-com space, which is so critical, has had also a knock-on effect to more sophisticated products like trade credit. And that's having let's say, a virtuous circle of being able to then grow your business. So it's less about credit control than it used to be, and more about how can we be smarter in offering a sales-led approach using products like these, which
Is
I think is pretty cool.
is speed a component of that? Because I would imagine when I said 35 pages of PDF, because then it had to be processed by a credit department and often took 5 days, 7 days, 2 weeks, whatever it might be, right? Yeah. And I think I would imagine speed has changed. Is that a component of this, at least for the buyers?
Yeah, absolutely. So the way it's changed is as you move into more of an e-com world, expectations of your customers change across all
Mm.
fronts. And so whereas historically, and I think in B2B, we're still very much in a omni-channel approach, right? You might start a sales process online, you might then talk to a salesperson. And so that element, it needs to be pretty dynamic. But when it comes to actually the moment of making payment, those expectations are moving into a much more digitally centered world. And so that's where speed comes in. And so actually, yeah, for us, we are an entirely automated solution. Our fastest kind of approval or account setup was about a minute and a half. And so we
Mm.
can actually allow businesses to sign up for an iwocaPay trade account and get paid in basically seconds, which makes it a lot easier for including running all the credit checks all in the background, all automated.
When you think of kind of best practices, is there such a thing as a high performing supplier when it comes to trade credit, and what does that look like?
Yeah, it's a great question and something we've actually learned over time. So iwocaPay, we try to make available to every business, who can use it. However, what we've also learned is that it it is a second generation product. You need to have to really get the benefit of digital trade credit solutions. You've got to have a good baseline of your business operations. And so what that means is we find we have higher adoption among digitally savvy or digitally invested suppliers, people who have an active e-com site or who are at least kind of very present in kind of their social media. They kind of understand how to use digital tools. They're using cloud accounting. This is kind of a prerequisite because once you start getting into digital trade credit tools, it's just a more sophisticated
Mm.
add-on on top of that. And so for us, that's a really big qualifier. And so part of the work that we do is really working with suppliers who are moving that toward that digital journey and helping them figure out, all right, cool, how is this going to fit in your world? If you need it to be offline and online, how can we make that work for you? And sometimes we also say, okay, listen, you're almost there, but you probably have some other problems or other challenges that you need to address first. Once you do, come back to us. We'll be ready for you. But we really want to make sure that that digital readiness and that ability to kind of embed the product into their processes kind of makes sense.
I think when we talk about digital experiences in ecom,
Mm.
often things like payment terms and trade credit, as you've described it, don't get thought through in the beginning. They often get thought through at the end.
Yeah.
Sometimes it's because you have a more of a retail focused company implementing, and they're like, we're just doing credit cards like we do in retail, and so this whole thing hasn't been thought through. How does this affect the actual digital buying experience, or how does payment terms affect it, trade credit affect it?
Yeah, it's a great question. And it comes back to that question of, what are your buyers' expectations and that kind of increase in number of sales. What we find is when we start working with a supplier, often their competitors will take note and be aware that that is a competitive advantage that they're offering,
Mm.
that their competitors are offering, and they're not. And so sometimes we will see that demand come from someone realizing how these additional tools and services will actually have a direct impact on the bottom line, but require some work to get there. And so for the buying experience, we definitely have buyers who come to us saying, "Where else can I use this? What other suppliers are offering this? This is really helpful." I think that for us, we offer our buyers a supplier directory so they can kind of see where they can use the product. That's how critical trade credit is. Once you have it, and you can basically take your terms wherever you go. It's a really powerful sort of sales tool, and so we sort of see that as an enabler for businesses.
As you kind of look at this report, how how should customers kind of read this, or what should they be looking through in this report and finding that's kind of practical to them?
Yeah, it's a good question. So part of this is we are very much at the beginning of a journey around let's say the digitization of trade credit, as well as the digitization of other kind of ERP tools and services, but certainly one for us. And so sometimes we recognize that it's not always on the radar of suppliers as a lever they can pull to increase their sales or improve their credit control, or just that these services are out there. And so this report, there's a couple of things we want people to do. One, it's a great place to kind of benchmark where you are as a supplier. So what are you offering? What are your competitors offering? How well can these services fit into it? Also, how digitally enabled you are. One of the other big findings, which is sort of complementary to us, because we want nothing more than an economy that is more productive, because in a productive economy, uses business, does better business, comes back and uses the product more. And so
Mhm.
that's a big driver for us. And one of the things that's the complementary finding in this report is how critical digitization is for productivity. And so what we found is that more digitally advanced suppliers are about 3 to 4 times more productive, i.e., their revenue per employee, than their kind of more traditional counterparts. And so we're really trying to encourage businesses to look at the report, think about where they are in this digital adoption journey, and then figure out if products and services like iwocaPay, like trade credit, will be useful to them to kind of continue that growth journey.
There were a number of kind of interesting statistics in the report itself. Let me read a couple that kind of all tied to digital sales. 66% of B2B suppliers reported that offering trade credit increased the number of sales. So we have the volume of sales going up. At the same time, a large percentage, 60%, report that they see an increase in average order value, which both of those have a pretty significant multiplicative effect on, revenue and margin and all of that. Why is this such a significant thing in digital sales to have those types of effects?
So part of it is your one thing that's interesting with for your customers. Put yourself in your customer's perspective. In your customer's view, you can only basically manage the cash flow that you have. And the great enablement of credit is credit allows you to smooth that cash flow, make it easier. So let's take an example. We work a lot with catering suppliers. If you're a restaurant buying a large, refrigerator, you're actually not going to monetize that product immediately. It's probably going to take, 3 months to do so. And so actually by offering a service like ours, where you're able to pay in installments, you're effectively giving your customer the ability to match their revenue with their costs more easily. So they're smoothing their cash flow. That's a huge win for a buyer.
Mm-hmm.
And therefore you will consider it when you start looking at where you make your investments and where you make your purchases. So that's where trade credit isn't just a sort of default. It's actually a strategic marketing and sales tool saying, I'm going to help you run a better business because by offering these kind of services, you're able to match your income with your outgoings.
I love that idea of smoothing cash flow. I mean, I think at the end of the day, most, at least not on the distribution side, distributors provide three kind of key things. They provide local expertise, local inventory, and that credit. And that credit's always the third leg of the stool that helps its customers that, I can do net terms. I can pay in 30 days, 45 days, 60 days, whatever it is.
Yeah. And I was going to actually add one just because I think it's interesting. Like we talked a lot about the more established suppliers who probably have some credit control processes and want to make those easier. On the other side, I thought the interesting bit of the report we discovered is that newer entrants where a third said they weren't that confident in their ability to credit control a customer. And that's absolutely right. That our whole existence as a trade credit supplier is we are experts in credit. We are experts in the underwriting. That is all we do all day long. And so part of it is how can we take that off the shoulders of suppliers who are probably growing into this space and say, you don't have to. We do this all day long, so you can just focus on the business that you run, making your operations better, making your services better, making your product better. And so a lot of suppliers we work with, that's a big, let's say, enabler for them.
I think that would also affect scale, right? So it allows a supplier, distributor to deal with a volume of customers they might not have been able to logistically handle or operationally handle in the past because they can they're removing that kind of credit risk from the time.
Yeah, exactly.
That's amazing. I think the report was pretty interesting. I personally learned something from reading through it. And so I appreciate it, even just learning about the trade credit. This is only, iwocaPay is a company dedicated to the UK market, correct?
iwocaPay. So iwoca actually exists in the UK and Germany for our loan product, which we've been doing for 15 years. But iwocaPay is only available for our UK suppliers and buyers. Yeah.
So while the service is that, I think the report should be read by everyone really to kind of hear what's happening in that industry and around this kind of specific area. So please, if you're a supplier, if you're a distributor, really anywhere in the world, check it out. iwocaPay.co.uk. We'll put the link in the blog, in the YouTube description, and on the screen for everyone too, as well as the specific link to the actual report. Lara, thank you so much for being here. I really appreciate the update on the report, and I'm sure a lot of people will get a lot of value out of it.
Yeah, thank you so much, Justin. Appreciate the chat.
Absolutely.